Welcome, ladies and gentlemen, to Lesson 12, Statement of Cash Flows. Alright, this is the last stop in our voyage with HMS Round Valley. Remember when we started HMS Round Valley? It's a company. It's a company that we've gone through their transactions from the balance sheet, common balance sheet transactions, common income statement transactions, to closing entries, and then through all the accounts receivable, inventory, long-lived assets, equity. Round Valley has taken us on this voyage to the not-so-exciting, not-so-exotic, not-so-wild land of accounting. All right, this is the last stop on that voyage. You know, HMS Round Valley it's a metaphor for a ship. It's a ship that is taking us to this accounting world where we're learning this foreign language of accounting. All right, so this is the last stop, Statement of Cash Flows. And you say, wait, there's lesson 13. There's one more lesson. Well, lesson 13 we go through a different company altogether. You'll see why in lesson 13, but we've excluded some important information from Round Valley for the purposes of learning. But lesson 13 we cover a different company. That's all you need to know. All right. Lesson 12, let's get started on the statement of cash flows. First thing we're going to do is go through some concepts and definitions, some key things you need to know before we get started. Alright, first thing, cash. You say cash, we need a definition of cash. Yes, we need a definition of cash. For one thing, cash can include multiple things. Securities, short-term securities, money market accounts, stuff that has characteristics of cash, similar to cash, but it may not be cash. So, definition of cash. Cash equivalence it's defined in FASB Statement 95. What's a FASB statement? Don't worry about it. That's where it's defined. All you need to remember is that's where it's defined. FASB Statement number 95. Cash and cash equivalents are amounts in checking and savings accounts, hard currency, highly liquid investments within 3 months of maturity. So if it's in with 3 months of maturity, even though it's an investment, even though it may not be cash, it's treated as cash. So that's why we need a definition of cash, because we include things that aren't really cash, but have characteristics of cash. All right, moving on. Let's discuss what the statement of cash flow tells us. The statement of cash flow helps to answer these questions. Is there enough cash to pay short-term debt? Oh, sorry. Where am I getting this information? Oh, lesson 12, bottom of lesson 12 cheat sheet. There's a lesson 10 cheat sheet. The concepts and definitions for lesson 12 are at the bottom of that, below those nasty bonds and discount premiums. We need to be there. The cheat sheet from lesson 10, the bottom, concepts and definitions, lesson 12, that's where we are. All right, bottom left-hand corner, pink box. Lesson 10, there's bottom of lesson 10, there's lesson 12, concepts and definitions. All right, the statement of cash flow helps to answer these questions. Is there enough cash to pay short-term debt? Are accounts receivable and inventory adequately managed? Has the company purchased sufficient equipment and other long-term assets? Did the company generate enough cash internally to finance the purchases, or did it rely on external financing? Is the company changing the source of its external financing? Okay, moving to the green boxes in the middle. Remember lesson 1. Cheat sheet from lesson 1. At the bottom there was these green boxes, and we talked about operating activities, the basic operating activities, then we talked about the basic financing and investing activities. Alright, these are the same boxes, but because in the statement of cash flows we disclose the information strictly about cash activities from operations, cash activities from investing, cash activities for financing, I've also included them here. So, we'll go through them really quick. Cash flows from operating activities. What are those? Cash flows and outflows that directly relate to income from normal operations reported on the income statement. Inflows from sales to customers, interest and dividends received. Outflows to purchase of goods for resale and service, salaries and wages, income taxes, interest on liabilities. That's cash flow from operating activities. Cash flow from investing activities. Inflows from sale of disposal of property, plant, and equipment, sale or maturity of investments and securities. Outflows to purchase property, plant, and equipment, purchase, investment, and securities. Remember from lesson 1 we went over this? Same thing. I'm going over them again though because this affects the statement of cash flows. Cash flows from financing activities. Inflows from borrowing on notes, mortgages, bonds, etc. Issuing stock to owners. Outflows to repay principal to creditors, excluding interest. Remember, interest is over in the operating activity. Repurchase stock from owners, dividends to owners. Alright, more definitions. Statement of cash flows. The statement focuses attention on ability to generate cash from its operations, management of current assets and current liabilities, expenditure for long-term assets, and amount received from external financing. Alright, interpreting the statement of cash flow. Operating cash flows must be positive over the long run for a company to be successful. You need to have cash coming in. Cash coming in. It's similar to a person. If you don't have a job, you don't have cash coming in, you can't do anything. You can't go out to eat. You can't buy food. Ultimately, your existence is probably going to be pretty bleak, just like a company. Down at the bottom of that box, an upward trend in operating cash flows over time indicates growth and efficient operations. If I'm an investor, remember, statement of cash flows is one of the 4 basic statements: balance sheet, income statement, statement of retained earnings, statement of cash flow. What do investors use those for? Investors use the basic financial statements to determine if they're going to invest. Creditors use it to determine if they're going to lend. Well, an upward trend in operating cash flows tells people that, yeah, I can lend to this person because they're making money, or I want to invest in that company because they're making money. If they're making money, they're going to give me that earnings, those retained earnings. They're going to give me those earnings in the form of dividends. That's going to be a return on my investment. So, upward trend in cash is good for investors. Statement of cash flows tells us that. That's why it's important. All right, top box. Information, top P box and customs and definitions. Information needed to prepare a statement of cash flows. You need a comparative balance sheet and income statement. You need additional details concerning selected accounts and cash payments. Okay, round belly statements. We're not gonna get into that required supplemental information, but we will in lesson 13. Remember when I said I exclude some information from round belly? That's what lesson 13. This is the last stop in round belly's journey, but lesson 13 we include something else. Well, that's because there's additional disclosures. The required supplemental information: cash paid for taxes and interest, significant non-cash investing and financing activities. All right, those are supplemental disclosures that we need, and you'll see in lesson 13 the statement of cash flows includes those supplemental disclosures. All right, bottom right-hand corner, a comparison of the direct and indirect methods. All right, there's 2 types of methods for operating activities: direct and indirect. Net cash flow is the same for both methods, right? You're going to get to the same answer, but you're going to get there a different way. The direct method provides more detail about cash from operating activities. The investing and financing sections for the 2 methods are identical. All right. Does any of that make sense? Probably not. But know that there's 2 methods, indirect, direct. On the lesson 12 cheat sheet, we're going to go through both. All right. So let's flip to lesson 12 cheat sheet. All right. HMS round belly. Remember the 3 things that we needed to prepare the statement of cash flow? We need a balance sheet, we need a comparative balance sheet, we needed an income statement, and we needed some supplemental information about interest and taxes, other financing and investing activities. Okay, we're excluding that. But right here we have the balance sheet, comparative. What does comparative mean? We need 2 periods. We need to compare this period to something else. Comparative balance sheet. So you'll see September 30th, 2010 and December 31st, 2009. We're comparing the 2 periods. Well, for the purposes of the round belly statement, you'll see the December 31st, 2009, those balances I made up. I made it up for the purpose of this exercise. But the September 30th, 2010 column, that's the column from lesson 4. We went through and we created that balance sheet through recording the common transactions from lesson 2, lesson 3, and then our adjusting journal entries. So this is the balance sheet we created. Additionally, the income statement down below is the income statement we created in lesson 2, lesson 3, lesson 4. All right, moving on. The left side of this cheat sheet, it talks about how we go about calculating the indirect method of cash flows for operating activities. Most companies do the indirect method. Why? Because if you do the direct method, you have to include a reconciliation of the indirect method. So if you do the direct method, you have to do the indirect method also. But if you only do the indirect method, you don't have to do the direct method. So you're not duplicating work. Most companies do the indirect method. Just know that. If you're required to do the direct method, you also have to include the indirect method. We're going to go through both, but first we're going to go through the indirect method because that's the most commonly used. All right, how do you do that? You start with net income. You add losses and gains. Remember back to lesson 3, the chart of accounts for round belly? We had at the bottom losses and gains, like the peripheral activities, the stuff that was secondary, not part of round belly's day-to-day operations. All right, well, in the indirect method, we add and subtract those losses and gains to our operating income before we can get to our net cash provided by operating activity. Also, we add non-cash expenses such as depreciation and amortization. What's amortization? It's the same as depreciation, but it's on different types of assets, like intangible assets or like bond discounts, bond premiums. We've seen amortization before. Remember in lesson 4 when we were doing our closing entries and we booked depreciation, also in lesson 9, long-lived assets, we were booking depreciation. Well, we add depreciation back for a purpose because it's non-cash. Remember, this is a cash flow statement. This is only cash transactions. So any non-cash, we need to add it back. We don't want to know about it. for accrual accounting, GAAP, we need to include it in our balance sheet income statement, but when we get to the statement of cash flows, take it out. Moving on, changes in current assets and current liabilities. And then when you add all those together, that equals your cash flows from operating activities for the indirect method. We're going to go through that in just a second. Now, our starting point is calculating the changes on the comparative balance sheet. So we're going to take our column September 30th, 2010, and we're going to subtract December 31st, 2009. All right? So you'll see the far right-hand column of our balance sheet box. It's the difference between the September 30th, 2010 column and the December 31st, 2009 column. That difference is going to go to our statement of cash flows, the indirect method. Remember down here, changes in current assets and current liabilities is included in the indirect method for the statement of cash flows. Well, this is our change right there. Now, I've color-coded. Some are black, some are blue, some are red. What do those mean? Well, go down here to the middle left part of the cheat sheet and you'll see, recall that the basic accounting equation is assets equals liabilities plus stockholders' equity. All right? From this basic accounting equation, we develop a model to solve the change in cash. Change in cash equals the change in liabilities plus change in stockholders' equity minus non-cash assets. That's the basic equation for calculating our statement of cash flows. So what do we need to do? We need to calculate the changes in liabilities, changes in stockholders' equity, and changes in non-cash assets. All right, well, so we're doing that here on our balance sheet. We're subtracting things like short-term investments. We're subtracting accounts receivable, our current period balance versus the prior period balance, our comparative balance. Now, continue below that box on the left-hand side. It says subtract current balance from prior period to get the change. Changes are treated as follows. And now I've color-coded these. The colors from here are going to match the colors on our balance sheet. So an increase in current assets we subtract from net income. An increase in current liabilities we add to net income. A decrease in current assets we add to net income. A decrease in current liabilities we subtract from net income. All right. Conceptually, that may not make sense why we do it that way. Mechanically, you got to understand that. Down here in this box, current assets, if there's an increase, we subtract it from net income. If there's an increase in current liabilities, we add it to net income. If there's a decrease in current assets, we add it to net income. And if there's a decrease in current liabilities, we subtract it from net income. All right, you'll see that they're color-coded. The blue up here, we're going to add to net income, and the red, we're going to subtract from net income. Now that we've calculated our change, let's go to the statement of cash flows, and I'm going to walk you through how we go down the statement of cash flows with the information we have on this sheet. All right, so the indirect method, remember, okay, the top left indirect method, it says, how do we get to that cash flow from operating activities? We need to start with net income. Top line of our cash flow statement, net income. Where do we get net income? Remember the three things we need to calculate or to come up with a statement of cash flows? Comparative balance sheet, statement of income, and supplemental information. Well, we get that net income from our statement of, in this case it says statement of, our income statement. We get that net income from the income statement. So I've referenced A, goes up here to A. Alright, what's the next thing we do? We add back losses and gains. Well, we didn't have any losses and gains. Going back to lesson 2, lesson 3, lesson 4, we didn't really have any gains. In lesson 9, we had a gain on a disposal, but that didn't really get into our balance sheet because that was